Okay, let's dive into this. Welcome to today's Explainer, where we are unpacking a massive, critical flaw in how financial and Forex brands approach growth. I mean, we're talking about a huge blind spot here. It's quietly draining marketing budgets and literally capping the potential of brands across the entire industry.
Most Forex brokers spend thousands on marketing, but almost nothing on credibility. That's a harsh reality, honestly. You've got brokers who are perfectly comfortable throwing thousands upon thousands of dollars at client acquisition, but they invest almost zero into the one thing that actually gets those leads to convert.
And you know, that reality? It is costing them way more clients than they probably realize. Because here's the deal. Before a prospective client even glances at your competitive spreads or the shiny new features on your trading platform, they're asking themselves one fundamental question. Are you legitimate? In the high-stakes world of financial services, trust isn't just a nice-to-have. It is the absolute ultimate prerequisite. It always precedes performance. So this brings us to a massive misconception that we really need to shatter right now. In the B2B marketing space, there's this prevailing, completely false belief that press releases are just, well, merely a tool for making boring corporate announcements, right? Too many people think PR is just for telling the world about a new executive hire or maybe a minor software update or opening a regional office. But clinging to that outdated model, that's acting as a massive bottleneck to your real growth.
Let's completely flip that misconception on its head. Strategic PR distribution is actually an authority engine. It is one of the most overlooked, heavy-hitting tools in the financial sector. When you consistently place your brand in respected financial media, you gain absolutely crucial third-party validation. And that exposure, it dramatically increases your search visibility, which then strengthens investor confidence. It's not about making announcements at all, really. It's about building an unshakable reputation management system.
Now, what's really interesting about this slide is the clear dividing line it shows between the winners and losers in financial marketing. On one side, you've got the weak strategy, which is relying heavily on one-off promotions, random advertising, and short-term campaigns. These are totally fleeting. Honestly, they vanish from the prospect's mind the exact moment you stop paying for the ad space. But on the other side, you had the strong strategy. This is consistent PR, repeated media visibility, authority positioning, and building a permanent search presence. This strong strategy builds a lasting asset. It pays continuous dividends in brand trust long after the initial campaign wraps up.
But hey, let's build some ultimate trust with you right now through some radical candor. We aren't selling snake oil here, so we really need to talk about what PR won't do. First off, it is not some instant magic growth hack that brings overnight results. Distribution alone is never going to fix a fundamentally weak brand. A single press release, that absolutely does not constitute a real strategy. And crucially, poor messaging will always yield poor results. For PR to actually work, it has to be part of a larger, highly strategic visibility engine.
So here's the core insight you must take away from this explainer today. The biggest benefit of PR isn't traffic. It is trust. It's helpful to think of trust kind of like a bank account. You have to make consistent deposits of credibility before you can ever expect to make a withdrawal in the form of a conversion. Financial clients, as we know, are extremely risk-averse. Third-party media mentions act as the perfect catalyst for establishing that perceived legitimacy in the marketplace.
And this brilliantly illustrates a simple but incredibly powerful psychological chain reaction at play here. It all starts with step 1, visibility. Being seen across respected platforms. Because human beings naturally trust what they repeatedly encounter, that visibility naturally breeds step 2, familiarity. And that familiarity drastically reduces the risk perception in the prospect's mind, leading straight to step 3, trust. Visibility influences credibility way before a conversion ever takes place. Which brings us to a pretty stark question in today's insanely crowded market. If your brand isn't being seen, who is? The brands that are winning market share today aren't necessarily the ones shouting the absolute loudest with flashy, over-the-top ad spend. No, they are simply the most visible and the most credible.
Someone else's is. If you aren't visible, your competitors are out there capturing that attention and, more importantly, capturing that trust. Platforms like Forex PR Wire show us exactly how consistent media visibility can solidify your long-term growth and really strengthen your authority. So I want to leave you with one final critical question to ask yourself today. Is your marketing budget currently buying fleeting attention, or is it actually building permanent trust?